Hi, my name is Shola Adeshakin, your personal finance coach. I'd like to talk today in this video about investments. Investments. I like the fact that in this day and age, financial literacy has become something that a lot more people are embracing. A few years ago, when I qualified from school, about 19 years ago, we didn't have as much opportunities, we didn't have as much exposure to information about investments. But 1 in 5 adults nowadays, 1 in 5 millennials will tell you, yes, I know about investments. Ask them, so what investment classes do you know? And a few people have, some very encouraging response to you. So I believe that at some point too, you must have heard the word invest. You must have heard the word savings. But let me quickly differentiate the difference between savings and investment. I tell people literally, saving is you putting aside, from your salary, from your income, from what have you put something aside as a compensation for your reward, for your efforts, for your work. Now, investment is putting to work. It's not enough to just put money aside. What are you doing with your money? What are you doing with the money so that it can generate a lot more return? So investment is now you putting your money to work. But if you don't put aside, you can't even put to work. So savings is a very, very important factor, to consider before you start to invest. So investing is you putting your money into something to work for you. There are places you never will be able to reach where your money can reach on your behalf. There are things you may not be able to physically do because we are constrained and restricted as human beings. But there are places that your money can get to on your behalf. You may be geographically located in Lagos, Nigeria, but you could invest in properties in the US, in the UK. That's what your money should do for you. So investing is literally saying, my money, you go to work for me. You go to work for me. So investment gives you the leeway to do and undo when it comes to your money. You are not restricted. You can decide to put your money in different asset classes. You can put your money in real estate, in mutual fund, in fixed income securities, in stock and bonds, and just everywhere. So investing is about you sending your money on an errand and expecting returns from it. So a lot of times people tell me, what can I invest in? And I ask them, what is your level of investment literacy? What are your peculiar circumstances? You just don't hear the word investment, or you just don't hear that there's a new scheme around, and then you just embrace it and you put your money in it. There are 4 different things you need to consider, very important things, before you jumpstart your investment journey. What is your current financial situation? Now, before you can invest, I'm going to talk about the different investment classes. You are earning 20,000 and you're hearing about real estate. Is real estate your first point of call for investment? Definitely not. You're going to get there. I like to say that personal finance, building wealth, is a marathon and not a sprint. People get it wrong when they try to make quick money here and there. But it's a marathon, so don't be hard on yourself. Take one day at a time. So your specific financial situation will determine what you can invest in per time. That is the S. Your age is very important in the kind of investments that you should do. So remember, I'm telling you 4 critical things to consider before you start to even talk about investments and investments you can you can partake of. Somebody that is 60 years old cannot decide to put his or her money in some things. You can say, oh, they said that the stock market is doing well. You go and put in your money. 2 years ago, the stock market, won an award. CNN carried it. Nigerian stock market did really well. But the past few months have been very, very, very exasperating, especially for shareholders and all around the world. The prices of stocks have dipped. It's a bearish market. People are losing money. People are pulling out of the stock market. So your age will determine what kind of investments you should do. Somebody that is 20 can still say, oh, I want to put my money in stocks, I want to put my money in this, because you still have a long time to retirement. But somebody who is 65 has just a few years retirement. You can't put your money into anything. The next thing you need to consider is your risk temperament. Everybody has a risk temperament, whether you like it or not. Some people are they don't want, any issues. They put their money in something, they want the capital guaranteed, no stories. Some people are all about the income, let the capital is there, but let it generally, fetch me income from time to time. So some people are very conservative when it comes to, their risk temperament. Some people are moderate and some other people are very aggressive. They hear about a scheme, they don't mind, put the money there, it will come out. If it doesn't, they're really, really, really aggressive. So your risk temperament also will determine what you should put your money into. Remember I said your financial situation, your age, your risk temperament will determine where you should put your money into. So what are the things that you can then invest in? You have known your risk temperament, you're conservative, you're moderate, you're aggressive, your age, your financial, peculiar financial situation. So what are the asset classes that exist? What are the things that you can put your money in? Generally, there are 4 classes of assets. I'll talk about real estate, just talk in no particular order. Real estate is you investing in the property, investing in landed property, investing in land. Either you buy to hold or you're part of, a crowdfunding system or structure. But real estate is just, about you engaging or putting your money in the real estate sector in whichever form you like. And there are a lot of variants. Now you have real estate schemes that will allow you pull money together with people, and then you can buy for hold, you can buy to sell, a lot of people are buying and renting real estate in recent times. So Airbnb, I heard about some interesting stuff that some guys did. They rented some apartments from a guy, and we're paying 3 million, and then they now started to do Airbnb with it, and they were getting about 91,000 per day. Imagine, even if they had only 6 months occupancy in a whole year, do the calculations. I think that's about 13 million or so. So yes, it is serviced, but there are a lot of opportunities in real estate that we may consider. Sometimes you may buy a property and then you sell, or you might hold, or what have you. So that's an asset class. Your income also, I forgot to mention, your income, the amount of earnings you make, will determine the kind of investments you can put your money into. Okay, so real estate, we have fixed income securities like mutual funds, like treasury bills, like all of the securities offered by the government. You have bonds. Fixed income securities simply means you put your money there. The amount you're earning from it is certain. If you do a federal government bond and they say it is for 2 years, you're getting 12% per annum, it is, sacrosanct. It's not going to change. And that's a good place to start for those who are just starting their investment journey. The federal government has been, doing some bonds. They call it saving bonds with a minimum of 5,000 naira. You can be a part of it, and they pay you your interest quarterly. It matures after 2 years. Your money is safe. The government is broke. Even if they are broke, they will print new money. So that's generally, safe. You have treasury bills. Treasury bills are, assets, instruments issued by the government through the central bank, where you lend money to the government for a period of time. There are, different treasury bills with different maturity dates. It might be in days. Not usually longer than a year. It might be 365 days. It might be 40 days. And the rate is also specified. It is fixed income. So at the end of the day, most times for treasury bills, you can decide to receive your interest upfront. So if you say you put 1 million or 100,000 in a treasury bill for 365 days and the interest is 12%, that means as you're doing that investment, you're getting 12,000 upfront, and at the maturity of the treasury bill, you get your 100,000 back. Now, mutual funds, on the other hand, are not exactly fixed income, in the sense that, sometimes the rate differs depending on the market dynamics. the mutual funds, market in Nigeria recently has experienced a dip. 2 years ago, it was about 18%. Last year, maybe 13. Now it's averaging about 11 to 12%. But what mutual funds really means is that you have 5,000, your friend has 10,000, another person has 10 million. You all put the money together in the hands of a funds manager, and the funds manager goes to work and, makes your money work for you and pays you interest. The good thing about mutual funds, more often than not, some of them are open-ended. Meaning you start with 5,000 naira, tomorrow you have 5,000, you can add to it, you have 2,000, you can add to it, and then your interest compounds. And at the end of the day, you have an app you can download, you see your money grow, on a day-to-day basis. A very fantastic variant to mutual funds, the Naira money market mutual fund, there are different types of, mutual funds. The money market is usually the simplest and the most flexible. You have the dollar-denominated mutual fund. Fantastic. How does it work? Minimum, one of the companies, the asset management companies and banks in Nigeria here has a very fantastic one. Last year I did a challenge where I said, people, the minimum to start your dollar mutual fund is 1,000. Save it up within 4 months and start. And it's been amazing. So you save $1,000. You start with $1,000. And you can add to it in multiples of 500 whenever you have it. So you start it in dollars and you earn your interest in dollars. There's so many, I'll put it under the notes video, some of the variants of the mutual funds that you can do. And particularly the dollar mutual fund, because of, the instability of the Naira. The Naira could be devalued at any point in time. So investing is very, very interesting. I should not forget to mention stocks and equities. You put your money, you buy shares of a particular company, and you earn dividends. It makes you a co-owner, of that business. Say you buy a Nestle share, you buy a Coca-Cola share, you buy a GTB share. No matter how small your money is, it makes you a part owner. And when they, declare profits, they pay you dividends. I know that the stock market has been quite, funny nowadays, but when the prices are low, it's a cool time to get into the market. The final asset class will be commodities, like gold, like oil, and you definitely need to seek, the advice of a professional when you're going into commodities or any of these ones. Nowadays, a lot of people are forming investment clubs. It makes it a lot easier. I have an investment club called the Smart Investment Club, and it's been fantastic. We have members from all over the world. What we do is we finance LPOs, we do real estate properties, we do all sorts. When we have opportunities like that, we pull the funds together, finance the project. When the funds return, everybody gets their bit with the interest rate. So that is another way where you can jumpstart and how you can jumpstart your investment journey. So I hope I've been able to, make you realize that investment could be interesting, but start from somewhere. You're getting the financial literacy on investment, read more about it, and, become active. I wish you all the best.